Hello, my name is Noella Auneau, founder of Trustful Bookkeeping, where we help consultants understand their number with clarity and confidence. Today I want to walk you through the 5 biggest bookkeeping mistakes consultants make and how to fix them. But first I have 2 questions for you. How confident are you in your bookkeeping? And if I ask you right now, how much did you spend on your business this month? Could you give me a clear answer? If you can't answer the second question, chances are you are making minimum one of the mistakes I will talk about in this video. Fix this mistake and you will not only stay compliant, but you will also make smarter decisions, pay less in taxes, and keep more money in your pocket. Let's jump in. Mistake number 1. Mixing personal and business expenses. Here is a common scenario. You grab lunch with a client and pay with your personal card. Later, you use the same card for doing your grocery shopping, shopping online, or pay for your kids' activities. By the end of the year, untangling all this mess is a total nightmare. It takes hours to reconcile and it can cause real headache during tax season. The fix is simple. Separate accounts and separate credit cards. One for business, one for personal. No exception. Trust me, it's a small change but can be life-changing. Mistake number 2. Ignoring your book until tax season. Picture this. It's March and you are getting ready to do your taxes. If I ask you about the $275 charge on your bank statement from January last year, the one with a vague description, would you even remember what it was for? Chances are probably not. I don't remember what I did last January. That's why monthly bookkeeping is so important. It keeps your financial clear, give you accurate tax estimate, and prevent bad surprises. Think of it like your business financial GPS. You can't reach your destination if you never look at the map. A simple habit can make all the difference. Block a little time every week to categorize that week's transaction. They will still be fresh in your mind and you will don't get overwhelmed by a huge pile of uncategorized transactions later. Mistake number 3 is not tracking receivables. Here is something I see all the time. Consultants send out invoice and just assume the money will show up. But if you are not actively tracking what's owed, payments can easily get lost in the shuffle, and that's real money leaving your hands. This is one of the reasons you shouldn't wait until tax season to do your bookkeeping. Tracking the money coming in and going out is very important, and it makes a huge difference. If you are using a bookkeeping software, which I highly recommend, check out the account receivable report. This lets you see your outstanding invoices at a glance. A good way to stay on top of it is to check this report when you do your weekly transaction categorization, that you are sure to not miss an invoice. Mistake number 4 is trying to DIY your bookkeeping yourself without the right tool. Spreadsheet can work when you are starting out, but it's very easy to do a mistake. And one small error can throw off your entire financial picture. There are reliable bookkeeping software options like QuickBooks or Xero that make tracking and categories transactions much easier and more accurate. It's not just about categorizing. You also need to reconcile your accounts every month to make sure everything matches. The mistake number 5 is closely related to mistake number 4. Miscategorizing your transaction. To understand this, let's quickly look at your two main financial statements. You have your balance sheet and your income statement, also called profit and loss. The balance sheet is the history of your business at a specific point in time. It shows your assets, what you own, the liabilities, what you owe, and the equity, what belongs to the owners. The income statement, this shows only the income and expenses for a single year. Every year, you restart fresh at 0. And in the income statement, you have the revenue, the money you earn from sales or services, and you have the expenses, the money you spend running your business. Here is a common example. Let's say you take a $10,000 loan for your business. Then $10,000 is not an income because you didn't earn it through sales. You now owe it to the loan company. So it goes on your balance sheet as a liability, not your income statement. Now, let's say by the end of the year you pay $3,500 back to the loan company. Of that, $3,000 goes toward paying the principal, reducing your liability. And $500 goes toward interest, which counts as an expense on your income statement and what decrease profit. At the end of the year, your balance sheet shows $7,000 still owed on the loan, and your income statement shows $500 of interest expense for this year. Getting this right is crucial because miscategorizing transactions can lead to overpaid taxes, inaccurate financial reports, and poor business decisions. Using proper bookkeeping tools and understanding the difference between assets, liabilities, equity, income, expenses make all the difference. You have learned in this video the 5 biggest bookkeeping mistakes consultants make and how to avoid them. So now you are ready and you have no excusing for not doing your bookkeeping. If you enjoyed this video and you are a consultant looking for bookkeeping that delivers clarity, not just compliance, click the link below to book a call and explore how we can support you. Have a nice rest of your day and see you on the next video.